Alright guys, let's have a look at another pattern that we teach at the My Daily Method thread at Traders Haven. And what we're going to look at now is the bearish outside bar. And if you look on the chart where I'm indicating for you now, that is the pattern that we're going to be looking at, the bearish outside bar. You have your first bar that is formed, a second bar that had a higher high, and a lower close. That is a bearish outside bar pattern. Now, if you read the thread at Traders Haven, you'll notice I tell you don't trade against the trend. So if you have a trend in place like this and you get one of these signals and you're new to the system, leave it alone. Don't do it. But if you're a little bit more advanced, you've been making good trades off the system, you're up to date with it, you know what you're doing, you may want to squeeze a few pips off a counter trend trade. So this is how we do it. We generally tend to use the MACD custom oscillator that we have at the bottom here to do that sort of a thing. Now you'll notice that on the first bar it was green. That's the first bar created there, it was green, and so it indicated that it was with the trend. When you had the bearish outside bar form, it was the first red bar on the MACD, and so the red bar on the MACD gives us confirmation that this is a pretty decent pattern and we might be able to get a few pips out of it. So what we do is you put our entry just a few pips below the bearish outside bar, have our entry point there. We put our stop loss just a few pips above the bearish outside bar, just a little bit above, and we don't try to squeeze more than anywhere between 20 and 50 pips out of a trade that's counter trend. So be careful, don't try to push it too far, take 20 to 50 pips off the table counter trend and then call it quits.